Hey everyone. So in this video, I'm going to elaborate on SoundHound AI's three-pillar strategy for how it generates revenue and monetizes its business. I'm also going to discuss macroeconomic factors like inflation and how that impacts SoundHound AI's business. And then a little bit later, I'll discuss some unique financial metrics to SoundHound AI. So let's get started with SoundHound AI's three-pillar strategy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so SoundHound says they have three pillars, right? Royalties from voice-enabled products, subscription from voice-enabled services, and the third pillar is monetization from connecting those services to products. Let's take each of them one at a time. Royalties from voice-enabled products. So an example of this could be, let's say SoundHound AI partners with a TV manufacturer and tells them, for each TV that you sell, of course TVs come with a remote control, we'll voice enable those remote controls. So for each one of those that you sell, you give us for example, let's say $5 or $1, whatever the case might be. So if they sell 1 million TVs, they will pay SoundHound AI $1 million. But if they sell 1,000 TVs, they will sell SoundHound AI $1,000. So this royalty-based revenue will give SoundHound AI the upside if these TVs or whatever the device might be turns out to be extremely successful. Then SoundHound AI will benefit from that success. It'll have the upside. However, it also gives SoundHound AI some of the downside, because if this TV or whatever device it might be does not sell well, that means SoundHound AI will not get paid very well. So it connects SoundHound AI's fortune with that of whatever product that might be. So SoundHound AI has to practice some prudency in the deals it signs. It needs to evaluate these products and determine whether or not it's worthwhile for SoundHound AI to sign a royalty deal if this product is not going to be very successful. So it needs to determine that up front. Okay, so the next one is subscription from voice-enabled services. So this could be something like a access to drive-through services, right? So you go up to a drive-through and you order with your voice, and there's a response. There's a screen that responds to you, and you order and you communicate with that service. And SoundHound AI may sell a subscription to that service and say, all right, for this year you pay us $2 million for that service. Okay, so that's a subscription service for SoundHound AI, and regardless of what the sales are through that voice enabled product, SoundHound AI will get a fixed amount of revenue regardless of what the sales are. So this is less risky for SoundHound AI. It lets them at least count on a certain amount of revenue from that sale. They don't have to wait to see what sales are through that channel. They can just go ahead and book that revenue every month like clockwork. That's less risky. And for a business like SoundHound AI, as an investor, I would prefer those types of sales initially, because they need that de-risking of the business. They're already generating losses on the bottom line, and so they need some cash flow to begin with, and then they can work on these royalty type deals and try and capitalize on the upside of some popular products. So that's where I would prefer SoundHound AI focus on, is that voice enabled service. And then the third pillar, which is very small, I don't think they've generated any revenue in this pillar just yet, or not anything meaningful, is monetization from connecting those services to products. Monetization from connecting those services to products. So for instance, SoundHound AI could sell a voice-enabled product for Stellantis, which is one of its car manufacturer partners. And then SoundHound AI can generate monetization from connecting that product, the voice-enabled product inside Stellantis cars, to other businesses for ordering. For instance, connecting that to Target. And anytime a customer maybe uses their voice to order something from Target and connects to Target store from inside their car and says, Target, can you order me? I want to buy a box of cereal and some milk, and I want to come to the drive up location, and I want you to bring it to my car. And so they can make that order in the car without ever having to take out their wallet or do anything. And while they're driving on their way home from work, they can go to Target and pick that up. And then SoundHound AI can get a fee for facilitating that transaction. That part of its business is not yet meaningful, but it wants to get there. It wants to get there. Okay, so I hope that explains and elaborates SoundHound AI's three-pillar strategy and how they plan to generate revenue from those three pillars. All right, so let's move on to macroeconomic factors and how that'll impact SoundHound AI. Notably, one of the prime macroeconomic factors that many businesses and consumers are paying very close attention to right now is inflation. Inflation has absolutely soared since the onset of the pandemic, as governments worldwide have injected trillions of dollars of stimulus into the economy, and that's created rising prices across the board, from everything to your groceries, to restaurant food, to furniture, to cars, to homes, across the board. Almost everything is more expensive today, and significantly more so than it was in 2019. So how does that impact SoundHound AI? Well, that's good news for SoundHound AI. Why is that good news? Because businesses that employ individuals are now paying much higher wages than they were in 2019. Much higher wages. And because they have to pay such higher wages, they're now more interested to replace employees with artificial intelligence technology, with voice-enabled AI technology. If you can employ an AI bot to take orders from people, from customers coming up to your drive-through, that's one less worker you have to have employed at your location. And so that drives down your cost. And if the cost of labor is going up, that just makes you even more interested in switching to SoundHound AI's AI chatbot. So SoundHound AI is positively impacted from inflation, positively impacted, especially labor inflation. As the cost of labor goes up, as the cost of wages goes up, it makes SoundHound AI's services that much more attractive because it replaces or reduces the need for labor. And so it's a big cost-saving advantage for many businesses. And as the cost of labor goes up, that just makes SoundHound AI more competitively advantageous. So I hope that sheds some light on those two main things that I wanted to discuss in this video, and that is the three-pillar strategy and how SoundHound AI is impacted from macroeconomic factors. I know I wanted to get into some financial metrics, but I'll save that for another video. I don't want to let this video get too long. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.